Welcome back, ladies and gentlemen, to Real Life Goals. With us here today is the Business Development Manager of Home Equity Bank, Mr. Geoff Chenier. Hi, Geoff.
Hi, Rose.
Now, there are so many questions. A lot of people are curious about the reverse mortgage.
Yep.
Now, tell us, what is a reverse mortgage and how does it work?
So a reverse mortgage is available to Canadians who are age 55 or older. It is a mortgage product, but what makes it unique is the fact that there are no monthly payments required.
Okay. So no monthly payments required.
No.
The next question is, why do people take out money using a reverse mortgage from their homes? What do they normally use the funds for?
So the funds can be used for a variety of reasons. Often cases it could be as an early inheritance, maybe to gift some money for their children to buy property of their own.
Okay.
Also for more simpler reasons such as renovations or traveling in retirement. But a more common use would be to help supplement income in retirement.
Okay.
It is a tax-free source of cash. And some clients as well, what they'll do is consolidate debt. So when they consolidate, say, a mortgage or credit cards, they could eliminate the payment and then further increase their cash flow.
So at the very beginning, you'll give them money. But before you give them the money, of course, there is a qualification.
There is.
So what are the things that you look at in order for them to qualify aside from age? What is the age again?
Right. So minimum age must be age 55.
Okay.
And we have to see if there's two spouses, right, in the home, both must be at least 55. They must own the property, must be their primary residence.
Okay.
Okay. Now, as far as qualifying, it's quite easy because we're not the same as, say, a traditional financing product today. So we don't have the infamous stress test, for one. And
Okay.
often cases, income is not even required.
All right.
So as far as documents, we'll look for 2 pieces of ID, property tax, home insurance. Those are the 2 big ones. And if we're paying out any debts, we'll take those statements as well. An appraisal is needed. And at the final stage of qualifying, every client must seek independent legal advice, and that
Okay.
would be an extra layer of protection for the client.
Now, I know that you actually look for some income. Is that right?
So depending on the situation, now,
If they are retired, for example.
yeah. So if, for example, the client has maybe a derogatory credit bureau. Now, we're very lenient on the credit bureau stuff. We do entertain individuals who have gone through consumer proposals, et cetera. But there could be an instance where maybe they were in arrear in their property tax, as an example. So if that happens, we just want to maybe look at their income. It doesn't make the deal, but just to ensure that they have enough to cover property tax and home insurance.
Okay.
So that
that's
is
the
really
use.
the main concern for the bank is as long as those 2 items are kept in check, then you're good to go.
So the primary use of having some income, or the primary purpose of having some income, is for people to actually be able to pay just property tax, make sure that they can also afford to pay
The home
food,
insurance.
home insurance,
Yeah.
aside from, of course, the regular bills like heat, hydro, of course, food.
Yeah. So what the product does, when we just kind of went back to the previous question of the uses for it, often people in retirement find it very difficult to manage their cash flow.
Okay.
Now, this is a problem that we see a lot nowadays. And it's often people, more than 70% of Canadians are highly dependent on the government pension, such
That's
as
right.
CPP
And
and old age.
OES.
Yeah.
Yes. Which is not much.
No, and slightly more than half of Canadians don't even have a work pension. So cash flow becomes a big necessity during retirement. So if they still have a mortgage or other forms of debt that they're continuously trying to pay, what the CHIP reverse mortgage can do is free up those payments.
Okay.
So they could live a better lifestyle in retirement.
And how would they know if how much they qualify for?
Now, we can lend up to 55% of the property value.
Okay, so
But-
from 55 years old
Right.
to like the age is 55 years old. So the magic number here is, I think, 55, right?
Right.
And then up to 55% of the appraised value,
Right.
of the property. So how would they know if how much they would qualify? I'm pretty sure if you're like, say, for example, if you're 55, do you have access to up to 55% of the
Not
value?
necessarily. So we'll lend up to a maximum of 55, but it is highly dependent on age. So
Okay.
the older you are, the more we can lend to the client, right? So this protects them as well in terms of preserving equity.
Okay.
So when you're looking at 55% loan to value, there are other factors such as property type, property location, but age is the big one.
Age is the main one. So if there are two applicants, let's say one is 60 years old and one is 70 years old,
Right. They
So-
may get less than the 55.
you will follow whoever is younger on the application.
Correct.
That's the age to be followed.
Yes.
Right? Because what I know is that if you are 55 years old, the younger you are, you start with 15% loanable amount or loan to value.
It's
right?
probably around there. We have some different solutions too that if they do require additional funds, we could look into that option. But when you're looking at the traditional chip reverse mortgage, we do try to be restrictive and very conservative, based on age as far as what we can lend.
Okay. So with this, there are so many misconceptions about reverse mortgage. Number one is, will the bank own the home?
No, the client will always retain ownership.
Okay. Can the bank force the homeowner to sell or foreclose at any time?
As long as the property taxes and home insurance are up to date, then the bank will never demand their loan.
How long is the term?
There is no term. It's a lifelong product.
Okay.
So the client can, it's designed for them to remain in their home as long as they want.
Okay.
And the loan is repaid if they decide to sell the home or if they pass away.
All right. Will a reverse mortgage, will the homeowner owe more than their house is worth?
Not likely. So 99% of our clients always have equity remaining.
So at the end of the term, for example, after 3 years, they've decided to move to a retirement home,
Right.
which could qualify them to. What will happen then?
Well, they have that decision that, say, after a certain period of time, if they do decide to move to a nursing home, maybe it's a better decision for them. They can just simply sell the home and the loan is repaid.
The loan is repaid. Can the homeowner still get a reverse mortgage if they have an existing mortgage?
Absolutely. We can pay out existing mortgages.
Okay, and then they don't have to pay anything anymore after.
Correct. Yeah.
Okay.
Yeah. And we can pay out additional debt if there's enough, cash available. So often the case is consuming, the high interest credit card debts or loans to help the client out.
So that gives them some relief in terms of their payables on a monthly basis.
100%.
Most
yes.
especially when they only have $1,100 in OAS and CPP, and then they still pay mortgage, property tax,
Right.
heat, hydro, and food.
Yes, and expenses increase year over year, and even one big important factor is health costs as well. As we age, right, we may have some health costs that come with that, and it does become very expensive. So this is a way to help alleviate some of the stress financially.
Great information, Geoff. Thank you so much. By the way, Real Life Goals will be right back after a short break.